What's up, advocates? My name is Vince Perry and welcome to the Commercial Claims Show, and I am so excited about the topic that we have for you today.
Welcome to my office. Let me give you a quick tour. Here at Noble Tax Strategies and Wealth Planning, we pride ourselves in minimizing tax, planning for retirement, and mitigating risk. Yeah, absolutely. So I've been in the industry now about 13, 14 years. Started out wealth management, working with high net worth individuals and business owners. Throughout the years, I had worked with previous big corporate firms, but back in 21, decided to leave the corporate world and open up my own firm. From the client and public standpoint, it is just one firm, Noble Tax Strategies and Wealth Planning, but behind the scenes, there's actually three separate firms. So we have Noble Tax Strategies, which is a full service accounting firm, doing everything from monthly bookkeeping and accounting, tax preparation, payroll, fractional CFO services, but more importantly, tax strategy and planning. Outside of that, we have Noble Wealth, which is a registered investment advisory firm, completely independent and fee only. We do investment management, financial planning, estate planning, and retirement planning. And then Noble Insurance Strategies, full service insurance brokerage, focusing on life insurance, disability, long-term care, and annuities. So it is truly all aspects of wealth and tax under one roof. So our ideal client typically is business owners and real estate investors. Now, within the business owner scope of things, it's going to be construction, public adjusters. We're working with public adjusters all over the country now. And when I say construction, it's more or less roofing, restoration companies, and then trades as well. So everyone that's kind of in the industry of individuals that would come in when there's a loss. And that's how we've really built our practices, through the referrals of these various industries. I would say so.
Okay.
Yeah. So the percentage of our clients that we work with that are in trades, restoration, public adjusters, encompass about 75% of our clientele and who we work with. Well, what's unique about them is really it's how I grew up in my family. We grew up blue collar. I never came from money. No one in my family ever did. All of my uncles, cousins, everybody was in some form of remodeling, restoration, whether it was painting, flooring, drywall, electricians, AC. So it's in my blood. That's what we work with. That's who I feel most comfortable working with. Right out of high school, that's the industry I got into. So I did that for 4 years, right out of high school. And then when I was 24, 25 is when I got into the finance world. So it's in our blood. So the type of public adjuster that we work with, it's a wide mix. So yes, there are quite a few that own their actual own business, but almost just as much that are just independent adjusters as well, that are 1099 from another company. A new adjuster, brand new to the industry, just getting started, highly recommend keeping track of your books first and foremost, because you're not going to know where you stand as a business owner or as an independent contractor. You're going to most likely miss out on potential deductions and overpaying taxes. So first and foremost, find some way to track your expenses and stay on top of that monthly. So within that, it's of course utilizing some type of software. QuickBooks is what we highly recommend. there's other forms to do it too. So you could use Wave, Excel spreadsheets, whatever works for you. Just make sure you're getting it done. Get a business account. So keep your business and your personal stuff completely separate. You do not want to deal with what they call commingling. Reason being is if, especially in your industry, if there's anything that ever comes back to where there's a lawsuit on you, if the person that is suing you, if their attorneys can prove that there's been any commingling of assets, which means using business funds for personal expenses, well, now you've just opened yourself up personally for all the liability. So keep track of your expenses. That's how you're going to avoid overpaying taxes. You're going to be able to run your business like a successful business would, and then limit your liability. Do not use personal funds for, or business funds for personal expenses. So anyone just starting out, or anyone just in general, you know, when it comes to wealth planning, and not just now, but for your future, right? We know that we can't work forever. You need to start paying yourself first. Figure out whatever percentage that is that works for you and your family, your household, your business. And as soon as those funds come into your bank, if that percentage is 5%, move it to a separate account immediately. So it doesn't get all caught up in all your other expenses that has to be paid. And work with an advisor. If you're not knowledgeable enough to do it yourself, which you're out there building your business, myself and other people in my industry, we spend years perfecting what we do, right? Hire a professional to do it for you, and pay yourself first. Separate that money, get it out of your account, invest for your future, because you want to retire one day. What would I recommend for somebody new to the industry when, you know, looking to actually plan for retirement and what type of accounts to open? Really, it is subjective on what that individual's wants, dreams, and comfortability with types of investment really is. There are some things to consider. As an individual, you have either a Roth IRA or a traditional IRA. Traditional is going to go in pre-tax dollars. It's going to grow tax deferred over the course of your working years. But whenever you take that money out, you're going to owe taxes on the entire amount. Versus a Roth IRA, Roth 401k, so forth. It goes in with after-tax dollars. So you still get all the tax-free growth. And then when you take the money out, it's going to be tax-free as well. But key difference is pre-tax dollars versus after-tax dollars. You know, within that, you have, again, the traditional or Roth IRAs, traditional or Roth 401ks. You have SEP IRAs, simple IRAs, solo 401ks. You know, the list really goes on and on. Then I have some clients that they're just not interested or not comfortable with the stock market in general. So being a independent registered investment advisory firm, unlike a lot of the big firms out there, we don't have to only work with stock-driven investments. We help those type of clients buy businesses, buy real estate. So again, it is very subjective to what the person's comfortability is with the type of investment that they want to get into. Over my 13, 14 years in the industry, typically what you end up seeing is people want to plan for their future, and they seek out an investment advisor or a financial planner. They have to seek out a CPA or an accountant. They have to seek out an estate planning attorney to draft their wills or their legal documents, a tax preparer to prepare their taxes. But what happens more often than not, there's a lack of communication between all those individuals and professionals. And most times there's no communication. So what that does in somebody's overall plan is really create gaps and true inefficiencies when someone's planning for retirement in their future. So by working with us, we completely negate that, because we have noble tax, we have noble wealth, we have noble insurance. So it's all aspects of wealth and tax under one roof. So we are collaborating together to make sure that your plan is solid and we're meeting your goals now and for the future.
Well, I hope you learned a lot of that show. There is so much in store for you in this channel. If you just fall into that rabbit hole, we've been doing this for 4 years. Click on one of these links here in front of you and see how much more you can learn on the Commercial Claim Show.